Americans for Fair Taxation presents the Weekly Chairman's Report, written by Steve Hayes, president of Americans for Fair Taxation, and recorded by Bob Paxton, a volunteer with the Florida FAIRtax Educational Association. And now, this week's Chairman's Report.
Hello, I'm Bob Paxton with the AFFT Chairman's Report for Friday, November 11th, 2022. The transition to the fair tax. A woman rubbed a bottle and out popped a genie. The genie said, "I'm a one-wish genie, so what'll it be?" The woman didn't hesitate. She said, "I want to replace the income tax with the fair tax. This move will allow the people to take back control and will help all Americans." The genie looked at the fair tax legislation and exclaimed, "Lady, be reasonable. The people in D.C. use the income tax to control people and extort money from lobbyists. I'm good, but not that good. Make another wish, and please be reasonable this time." The woman thought for a minute and said, "Well, I've never been able to find the right man. You know, one that's considerate and fun, likes to cook, help with the house cleaning, gets along with my family, stays in shape, doesn't watch sports all the time, and is faithful. That's what I wish for, a good man." The genie let out a sigh and said, "Let me see that fair tax legislation again." Replacing the income payroll tax with a fair tax is becoming more possible as more people see the truth. The income payroll tax system only works for people in D.C. and their friends. Now, one of the questions to answer is what happens when the income payroll tax system is replaced by the fair tax? Now, fortunately, this has not only been thought through, but is actually a very straightforward process. The article below was written by Dr. Karen Walby. Now, Dr. Walby is the research consultant for Americans for Fair Taxation. Fair tax transition issues. What is transition? A term that often arises in tax reform discussions is the need for transition relief. Now, transition is defined by the Cambridge American English Dictionary as the process of changing or a change from one form or condition to another. Thus, transition relief consists of provisions to protect taxpayers from financial harm and to avoid economic windfalls arising solely from the tax law change. When changing one tax system for another, especially in a revenue-neutral manner, policymakers should consider that there is adequate time for implementation and to minimize economic hardships taxpayers may encounter in transitioning to the new tax system. At the same time, to realize the economic growth benefits of the reform, such transition relief should be based on the criteria of simplicity, efficiency, and equity of the tax system. The transition rules in themselves should not introduce any major new complexity into the tax law. To the extent possible, transition rules should not require that taxpayers supply additional data on financial transactions or asset values. The transition rules should be designed to minimize the probability of action in response to special features of the change from one set of tax rules to another. In particular, there should not be special inducements to either buy or sell particular kinds of assets just before or just after the effective date of the new tax law. So let's look at transition under the fair tax. The fair tax legislation, H.R. 25, changes the federal tax system from one based on income to one based on consumption. Now, that's a major change. This article addresses the major transition issues, but is not a full enumeration of all of them. The complete switch from income to consumption, however, does have advantages with regard to the need for transition relief compared to a flat tax, which still taxes income and payroll. Transition issues under the fair tax are more easily handled than under a flat tax. The fair tax completely eliminates all taxes on business or personal income. Businesses and individuals will no longer be paying these taxes. Now, this minimizes any concern with loss carryovers from the existing system or other unused income tax credits or deductions. With respect to unused income tax credits and deductions, some form of transition relief is appropriate under a flat tax or other reformed income tax, since firms and investors are going to continue paying that tax. But under the fair tax, corporations and investors don't need transition relief. After all, how can a corporation or an investor be worse off because he's been relieved of having to pay income taxes altogether? With respect to property owned when the sales tax is enacted, the Fair Tax exempts the sale of used property from tax as the simplest approach. The upshot of this is that market demand will likely bid up the price of used property, especially homes, until the price of the exempt used property, adjusting for wear and tear, is nearly the same as the cost of new taxable property, which is subject to the fair tax. Taxing used property as well as new property would eliminate these windfall gains. However, it would violate a basic tenet of the sales tax, that the value of the property is taxed once and only once. No transition relief is necessary for savings distributed from pension plans, IRAs, and other qualified retirement plans because, except for Roth IRAs, neither the contributions nor the accumulated earnings in those plans have previously been subjected to income taxation. Under the Fair Tax, income-earning assets and distributions from retirement plans that are currently subject to income tax will not now be paying tax, causing the market value of these assets to climb considerably to reflect the higher rate of return resulting from the repeal of the income tax. And finally, the Fair Tax legislation also adjusts the Social Security benefits indexing formula, commonly known as the Cost of Living Adjustment, or COLA, so that Social Security benefits increase to the extent, if any, that the federal sales tax results in higher costs to seniors. This preserves the purchasing power of seniors under the Fair Tax. Additionally, the Fair Tax does not tax Social Security benefits or investment earnings received by seniors, nor does it tax the employment payroll of seniors who must work to supplement their retirement income. Fair Tax Transition Rules. Transition rules specify the temporal conditions under which specific tax provisions former apply. The Fair Tax does incorporate 3 expressly stated transition rules in H.R. 25, a transitional inventory credit, a deferred effective date, and a phase-out of the IRS. First, since inventory is not deductible under the income tax until it's sold, existing inventory will have been acquired with after-tax dollars. To then subject inventory held prior to the effective date of the Fair Tax to a sales tax would constitute double taxation and disrupt markets. Businesses that have inventory on the date prior to the enactment of the Fair Tax qualify for a transitional inventory credit if the inventory is sold subject to the Fair Tax within a 2-year period. Qualified inventory shall have the cost that it had for federal income tax purposes for the active business as of the end of the final income tax year. The credit is equal to the cost of the qualified inventory times the Fair Tax rate. To ensure that the inventory credit can follow qualified inventory through the supply chains, businesses may sell the right to receive the inventory credit. The inventory credit indirectly allows for a transitional period for manufacturing and retailing to adjust the pricing without the inclusion of income and payroll taxes, corporate taxes, and compliance costs that before the Fair Tax were a large percentage of the cost passed along to the consumer. This means being able to keep some prices the same immediately after the effective date and then change prices over time, removing the inducement to buy or sell just before the effective date. Second, the Fair Tax pushes forward the effective date in order to allow time for the economy to adjust to a consumption tax. The Fair Tax Act of 2021 would not take effect until January 1, 2023. Third, for an orderly end to the income tax system, the IRS is phased out within 3 years of the effective date of the Fair Tax. A phase-out period is necessary to allow the processing of income tax payments and tax refunds for the final year of income payroll taxes. At the end of the 3-year period, H.R. 25 provides that all tax records are destroyed and it deauthorizes any appropriations for the Internal Revenue Service. In conclusion, Dr. Walby's article demonstrates that not only is there an efficient and well-thought-out process for transitioning, but that it's all provided for in the Fair Tax legislation. The income payroll tax system is broken. It's no longer working. We can't repair it, but we can replace it with the Fair Tax. Join us and take back control of our country and our lives, not with bullets, but with the elimination of one of the biggest threats to our liberty and economic prosperity, the income payroll tax. So what can each of us do? We can write letters and make calls to our elected representatives and attend Zoom town hall meetings demanding that if they really want to allow Americans to take back control, the first step is to eliminate the income payroll tax system and enact the Fair Tax. Take back control. Help us pass the fair tax. The IRS will be gone and we'll pay our taxes when we make purchases. We, not the ruling class and their minions in D.C., will decide how much federal tax we pay. And we'll know how much tax we're paying because taxes will no longer be hidden from us. They'll be clearly shown on every retail receipt. If you have friends who don't know about the Fair Tax, send them to FAIRtax.org. Have them watch the whiteboards under how it works, and if they agree, ask them to please join us. Then, contact your members of Congress and the President and demand that Congress pass the Fair Tax, the only truly fair tax.
This has been the Weekly Chairman's Report, written by Steve Hayes, President of Americans for Fair Taxation. Check back every week for news and information about the fair tax, and learn why the fair tax should replace our antiquated federal income tax system. If you'd like to receive a copy of the Chairman's Report in your inbox every week, sign up at FAIRtax.org.